First of all, indeed, the overall environment is still very challenging. We've had third quarter GDP growth negative. We get fourth quarter numbers very soon, and we've indicated that they might once again be negative. This would imply technical recession for the Eurozone. We see that the headwinds from tight monetary policy, from now increasingly tight fiscal policy, also the weak external environment is really holding economic activity back. For the ECB, it means, the outlook for inflation coming down further from here. So far, the disinflation process has in fact been somewhat faster than anticipated, will continue. It's too early to cut rates. I think this week, on Thursday, the ECB will have an interim meeting. We shouldn't expect any policy decisions, but it will give the ECB an opportunity to look at the latest data, inflation data, activity data, sentiment data. It will be a bridge, this week's meeting, towards the more important meeting on the 7th of March, when they will once again issue staff macroeconomic forecast, and that will give us a better view where we really stand.
The December ECB was an interesting one, and I know that many became a lot more dovish after that meeting. I know you yourselves also changed your call, now calling for an April rate cut. It was June before that. How confident are you feeling about that April call at this point, especially given what we've heard the last couple of weeks, and also Lagarde's commentary in Davos suggesting that actually they can afford to be slightly more patient than markets are expecting?
I think you cannot be very confident about an April rate cut. So we previously expected June, but then brought it forward to April for some of the reasons you mentioned. But we said at the same time that we did not make this change from June to April in a wholehearted fashion. It was a somewhat reluctant change, a reluctant attitude to the change in the call. Why? Because the ECB has always said that the development of wage growth over the spring of 2024 will be very important for their own assessment of the situation. And the meeting in April is on the 11th of April. So at that time, we will only have impartial data on wage development. So we said, the ECB will actually have to perform some sort of leap of faith. They will have to give the data, the very limited data, the benefit of the doubt, and take some risk. But now, indeed, with the hawkish commentary, particularly in Davos, we have signaled that the risk to our call that the first cut will already come in April has certainly increased.